we still have a price-to-book value of about 1.4 times, which shows that relative to peers, Nigerian equities are still undervalued, and it's no surprise that we're seeing these massive rallies in the market.
Is this rally over? Is it done?
No,
are we done?
Like I just mentioned, the fact that our equities still remain undervalued means there's still potential for upside. So we still see appreciation going forward. We expect the rally to be sustained.
So what's going on with the folks in the oil and gas, the big seven, as we track them? Seplat, Oando, Forte Oil, Cornell, MIS, Total, Mobil, that's the seven. Yeah.
Yes. Well, prior to last week, if you remember, there was a period where we had a surge in oil and gas, in the oil and gas index in terms of performance compared to peers when most of the other indices were down. Even prior to the launch of the FX window, when most of the other indices were down, we saw the oil and gas index appreciate. And now we're starting to see some investors take profit in some of these stocks, even though we don't necessarily think this profit taking will be sustained. And this week, we might start to see some interest in oil and gas stocks.
Do you think the rally is out of one of the seven sisters? Mobil, as far as NIPCO takeover is concerned, the approval is out from the SEC.
Well, if you remember, prior to the takeover, we saw the massive rally that we had in Mobil as investors were positioning ahead of the takeover. But we started to see some of those gains taper out as a lot of investors have started taking profit. So we might see a continuous slide in price of Mobil in trading sessions ahead.
Why do you think investors are a little bit lackluster when it comes to the oil and gas? Of course, 99% of the stocks listed in that space are basically oil retailers, with the exception of Oando and Seplat, a few fingers in oil and gas production. So, do you think they're concerned about the subsidy through the grapevine, subsidy increasing, and call for perhaps minimum wage? What happens to petrol prices? The Senate saying, look, government has no intention to raise petrol prices. Petrol is very highly inflammable. Nobody wants to light any fire near any petrol can. As it is. So everybody say, hold on, we're not part of it. If anybody's going to move petrol prices, we're not part of it. Everybody's fighting for his political shirt. So prices are going to remain, but subsidies keep rising because, again, crude prices is going higher, and our consumption hasn't really tapered off significantly despite a bit of a slowdown that we've seen.
Oh, well, the thing is, earnings capability for most of these companies, like you mentioned, retailers, for the fact that pricing of petrol is still fixed and we haven't seen that sector deregulated, it means the capability that of their earnings, how much their earnings can grow, is somewhat constrained. If you know, following the partial deregulation that we had in 2015, 2016, we saw the appreciation in oil and gas stocks, and we even in terms of looking at their performance, we also saw a significant improvement. But for the fact that prices still remain highly regulated, forward earnings for these companies still remain rather soft.
Technically, there's no headroom.
Essentially,
there's a little room for headroom, and of course, petrol accounts for a very good chunk of their revenue. So not much lubricants and whatever don't account for for much.
Well, so for the fact that still remains constrained, we haven't really seen investors turn their attention towards that. What we've seen is mostly in the banking sector. We know most of the tier 1 banks, even tier 2 banks, have been appreciating significantly over the past couple of weeks. Even industrial goods, last week we had Danksem gain about 15%. Consumer goods, we've also seen Nestle, Nigerian breweries rally. So investors' attention has been turned mostly towards those stocks. And even historically, when we had a lot of foreign participation in markets, these are actually the stocks that most of the investors were tracking, and it also points to the fact that we're starting to see the return of some foreign participants into the market.
The news came in this morning, talking about the banking a little bit. The news over the weekend from Zenith Bank was that its Eurobond, $500 million, was oversubscribed 400% to the tune of $1.2 billion. US dollars. That's the latest global offering that will mature in Eurobond 2022. That's massive, isn't it?
Yes.
For Zenith Bank to pick $1.2 billion from international investors, and that's
actually a good one for them, and also shows you the sort of changing perception that we're having in the market since the launch of the I&E window. So it's clear that a lot of investors are going to be looking towards the developments in our FX markets to know whether the time is right to return.
Very interesting how the industrial and goods sector are also coming into this discussion. But very quickly, the banking cousins, the insurance folks, also seem to be riding on the back of their big brother. That's quite a massive 6% in one single week.
Yeah, so we saw a lot of interest in stocks like Mansard, NEM Insurance. So it's also riding on this positive, this generally bullish wave that we currently have in the market. A lot of investors taking position in some of these insurance stocks.
Give me your outlook for the new trading week.
Well, early trades in the week, we might see some slight profit taking in some stocks that massively appreciated last week, but we expect it to be generally positive. So we believe the bullish run will be sustained this week.
The bull is not done yet.
No,
I don't expect to see any beer on the street yet. Okay, let's keep the bullish sentiments in the week. Thank you very much, Eroma for coming early in the week to talk to us. And let's tie in very quickly there the currency conversation. Look at the Naira-dollar market currency very quickly, and we just have bring that in. Thank you, folks. At the interbank spot market, the Naira was lackluster on the greenback, 305.50 on Friday against the British pound, 418.25 Naira. We fetch you 1 British pound. That's 3.78% for the pound, for the Naira, beg your pardon. And the Naira Euro, 366.51, negative 4.12. On the street, that's where the Naira pressed down the dollar massively for the first time in 2017. We saw that record, bringing the dollar down to 3.75 on the street, 1.83% for the Naira gain there, 2.02%. The Naira advanced on the pound sterling. The investors exporters window, that's a 0.64%, 378.56. Keep that in mind. We're back after the break.